wake up in the morning, feeling the weight of the world on my shoulders. I wanna move closer, but I don't control it. I know I've been trying, the door isn't open. I know it sounds funny, but really though, in the beginning we really close. Now we just cruising up on the coast. Don't wanna lose you, I really don't. My God, I'm working so hard. I let my guards down and I'm feeling so far. You won't cut me off and I'm ready to grow and I'm ready to know you more. Please, I honestly say I'm mature. It ain't my decision, it's yours. But I will persuade with my arm, cause I'm ready to run to your arms. I just want you to know that I wanna go to a place where I find you, a place I call home, a place where I'm not alone. And maybe I'll grow just a little bit more, and I'll be adored. Then I'll be adored. Then I'll be adored. Then I'll be adored. Then I'll be adored. I go back and forth when I feel your presence. I'm above the world. There isn't much better, but then I fall levels and levels below it. Don't know where I'm going, don't know where I'm holding. I say I gave up, but I know I didn't. It's just my frustration, I'm only human. I act like I know what I'm really doing. As long as it's you that I'm really choosing. I will never give up, no, I wanna do it your way. You're the king of the world, only wanna do what you say. I know that it's possible to give back my heart to you. Do it that you choose. I just want you to know that I wanna go to a place where I find you, a place I call home, a place where I'm not alone. And maybe I'll grow just a little bit more, and I'll be adored. Then I'll be adored. Then I'll be adored. Then I'll be adored. Then I'll be adored. I know that you love me, I really do. Just wanna do right by you till it's through. Please don't ignore me, please just adore me. Wanna be closer to you. I just wanna make you happy. A shining light looking right at me. I give to you gladly, that's my reaction. I just want you to know that I wanna go to a place where I find you, a place I call home, a place where I'm not alone. And maybe I'll grow just a little bit more, and I'll be adored. Then I'll be adored. Then I'll be adored. Then I'll be adored. Then I'll be adored. Okay.
Welcome to Parents and Pennies, where family meets financing and every dollar counts. Brought to you by MITM Business Consultants. Join your hosts, Art Abrahamian, with over 12 years of experience in finance, banking, and business advising, and Roy Rosales, a father of two and coach to many, who has an extensive background in real estate. These two family men are here for you, bringing real stories, practical tips, and financial wisdom every week to keep your family thriving. They'll help you secure your family's financial future through simple, memorable financial adjustments that will help you achieve your financial goals. Because when it comes to family and finances, it's not about having more, it's about making the most of what you have. Here's Art and Roy.
What is going on, everybody? Episode 13 of Parents and Pennies. Let me fix this mic. It's been a while. It's been about a month since we last did this. Roy, what's up, brother? How are you?
Hey, I'm truly blessed. More importantly, how are you doing, Art?
We're doing good, man. We're doing good. It's been a interesting couple months, but it's been good. Blessed with a brand new baby. That's why I haven't been around.
Yeah.
And then just working through some more medical stuff that keeps just coming up, man. Well, the old life just keeps coming up.
It's life, right?
That's it.
You know,
baby.
It's life, and that sometimes we can't control, and
yeah,
everything's going right, and then bam, there you go.
Yep.
There's your little thing that we got to work for, but that surrounding yourself with the right people.
Yeah, and I think that's gonna segment well into today's thing, where it's like, just because you're doing good now doesn't mean all the bad you did before can't catch up with you, right? So for me, it's like all that bad eating and bad lifestyle choices. I may be healthy now, but it doesn't just undo all the bad. So we are joined today by a very special guest. We have Jasmine from Jayoh Credit Repair, and she's here to help a lot of our followers and listeners about the misconceptions of credit and some, good tips and tricks, house cleaning tools for keeping the credit going good.
Or listening to the wrong person.
Or listening to the wrong person.
About the credit, so take it over, Jasmine.
Tell us a little bit about yourself before we get going.
All right. So I help people fix their credit. The way that it started was by myself. I had just come back from school in San Diego. I got kicked out because I had bad credit.
Oh.
So I couldn't get loans, I couldn't pay up. I came back out here, did an internship, but I had bad credit. So I couldn't get an apartment, couldn't get anything. So I had to work on my own credit, figure it out. Back then there wasn't a lot of these companies that there is today. So Google was my best friend. I learned a lot, fixed my own credit. And through the process, I was like, wait, why get an apartment when I can get a house instead? So I worked towards that, and that's basically how it all started. Friends saw the process, and they were like, hey, I want to do the same, So, I started doing lives and videos and stuff like that, and I kind of just accidentally fell into all this stuff, but I love doing it, so.
Yeah. Well, there's no accidents, right? God's plan is better than our plan. We all have a purpose. It's just, we have to go through our trials for us to understand what is our purpose. And, you found something that you went through it, so it hurt you that you wanted to make a change, right? And you're like, there's another way. And that's where the hopeful comes in, and you bring in hope to other people. That's powerful right there. That's awesome.
Yeah, I think it's one thing to say, hey, I've never had this issue, but I'm going to help you with this issue. And it's another thing to be like, I've had this issue and I'm going to help you with this issue. It makes a person feel a little bit more comfortable saying, hey, this, the person in front of me gets it. When they sit with Jasmine, she understands.
She's been in my shoes.
Yeah.
Yeah, and that's a lot of people, they'll be like, I hadn't contacted you because it's so bad. And I'm like, this is my story. Trust me. I've been there. I've done that. So
trust it.
Definitely been there. So
damn, that's crazy, man.
Well, let's get right.
We all been there. Yeah, what I mean? We're all been there. That's why we're here. That's crazy.
Well, let's get right into it. The first question I'd ask for you to answer is, what's the first thing someone should do if they know their credit is bad?
So the first thing I would suggest is see why it's bad, because it could be different things. It could be as simple as paying off your cards. Your utilization's too high, and that's why you have bad credit. To maybe it's more than that. Maybe you have collections and, things that you have charged off. So the first thing I would do would be why is my credit bad?
You said utilization. What do you mean by that? What is too high?
So utilization is basically how much you use of, the credit that you have available to you. So let's say I have a credit card and I have $1,000, credit limit. If I go out there and I'm spending it all on coffee,
running
it up, then the lenders are going to see that, and they're like, hey, you're using all the credit, that's not good, so you get penalized for that. Usually what I tell everybody is keep it under 10%. So if you do have $1,000 credit card, keep that balance under $100.
Okay. Okay. And that just keeps your credit in where it's at, or does it go higher?
No, it goes higher. So So let's say you have utilization 1 month and it's 100%. your score can drop like 60 points.
Oh, wow.
More or less, you know. And then let's say you pay it down, you know. And I've had that happen where I have clients like, hey, like you deleted things, but like my score, you know, it's lower. Like you're doing things, but it's lower. So I'm like, all right, well, let's take a look at it, you know. I'm like, well, your utilization went from like 5% to like 105%, you know, like let's fix that.
Yeah.
You know, paid off. And so, yeah, it makes a big difference.
Okay. Well, thank you for letting me know that. Hopefully my wife heard that.
I mean, 10%. Don't do that to her, dude. She's going to say 10%. That's it.
Let's negotiate.
Yeah. I mean, there's a lot of misconceptions about that too, right? I mean, one of the misconceptions like, oh, checking my credit is bad. It depends how you do it, right? If you're checking your credit by applying for new credit products, yeah, it's obviously going to be bad because you're actively utilizing and doing what's called a hard inquiry on your credit. This was a common thing that we would deal with, you know, working in the banks. It's like, you're in escrow. Don't go check your credit.
Yeah.
Don't go buy a new car. Yes. We tell our clients, like, sit there, sit on your hands, and don't talk to anybody.
Yeah.
If somebody calls, don't answer the phone because, you know, you have the situation happen where it's like, okay, you just ran your credit through a hard inquiry. You just messed up the whole loan process application through escrow or through whatever it is we're doing. And I've seen deals crash completely because of that. The 10% utilization that's a very conservative number, but I think it's 30, right? 30 is the technical number through the bureaus.
So it depends, really. Different FICO models take it into different account, and they've done kind of like, if you go online and you look it up, you'll see like 30%. But if you actually like try it and see other people who have kind of tested it, it's usually under 10%. It's usually, you know, around 7% more or less.
Yeah.
But that's one thing too that I'm like, why are they putting 30% if it's been tested, you know, by tons of people, and it's more around 7%. So yeah, you'll see 30% a lot, but I tell all my clients, like, keep it under 10.
Yeah.
Well, that's good. You know,
that's a fair conservative number to say.
But that's also, hey, you know, you're in this position because you had a bad habit. So keep it at 10% is, hey, be thankful for 10%.
Yeah.
Because I got you. No,
that's I agree. Cool. I agree. One of the things when I was putting these questions together, it's the red flags, right? What are the red flags people don't realize are hurting their credit? Because that's a common thing where people, I just don't get it.
Yeah.
I just don't get it. And I think people need to understand too, the bureaus they are people behind the bureaus, but the thing that's shooting out this score is a computer. There's not a person who's sitting there going through every single household in America and going, I think this guy is worth 710 points today, and tomorrow he'll be worth 720 or 730 or whatever it is. You have to remember that it's a computer, and it just generates these figures and models through DTI, debt to income utilization on the credit usage, CLTV. I mean, there's a million factors that go into it, but it's just remembering that, like, you may not agree with it. There's even that situation, I'm sure both of you have seen this. Oh, I paid my credit card off. Why is my credit score not up? Well, because maybe when you paid it off during the month, the system refreshed prior to the payoff.
Yeah.
So you're going to have to wait another month for that to reflect. Again, these things are not, common sense is not common, unfortunately. So, you know, what are some red flags, Jasmine, that people can take a look for that they may not realize are hurting their credit?
Yeah, so I'm kind of glad you brought that up too, because you do have those people that are like, hey, I paid my whole balance off. What's going on, you know? But at the end of the day, it's like, when did you pay it?
Right.
Oh, I paid it by the due date. It should be, that's not how it works. And that's one thing that we're not taught, that there's two different dates. There's a due date and there's a closing statement date. So you want that balance, that low utilization, to be at the closing statement date. Once you pay on your due date, you're too late. Like, that statement, it already closed. So they already reported your high balance, even if you do pay, you know, you paid after. That's the first one, which, you know, utilization, I think, is the biggest thing where people are like, why is my score like this? And it's like, well, your utilization's high, you know? But again, it goes back to that, like, when did you pay? You know, you got to make sure, like, that's one thing that I teach my clients too. Like, this is how you locate your statement closing date, and this is the date that it gets reported to the credit bureaus, not your payment due date. By then, it's already reported.
So if it's due on the 15th, when should they pay it?
So, to have the low utilization, they would have to pay it before the statement closing date.
And when would that be?
It's always different.
Everybody's is different.
Yeah, it's always different.
Okay.
It's like when you get a car, right?
Uh-huh.
You might have bought the car on the 15th, but your first payment's not due till the 20th of next month.
Yeah.
But it's been a month and 5 days.
Or just like your electricity, you know?
Yeah.
Like
Okay.
it fluctuates a little bit.
Okay, gotcha.
That's the first one. The second one is people have had credit cards, you know, for like 2-3 years, and they're like, why am I not in the 800s? But it's like your credit, it's like a baby still, you know? You have to wait and just, there's a term when I was, you know, learning how to fix my credit on my FICO forum, they call it gardening. So you're basically waiting. You're like watering your garden, and you have to wait. You know, it's
For
not
it to
just
grow.
gonna. So you need your credit. You know, that credit age history. You need it to get older. You know, 10 plus years. That's great right there.
Yeah, I think there's something to be said, and I say it all the time, where it's like you get a young kid who's like, well, my credit score is 700, 800. I'm sorry, guys. I'm over here trying to fix all these cameras. It's been a while. All right, I'm rusty.
Yeah.
I'm rusty. Anyways, got these kids who come in, you're 18 years old. Oh, I have a 700. I have an 800. It's like you have one Best Buy credit card and you have an 800. Slow down.
And you're an
Chief.
authorized user.
Yeah, it's like, slow it down, Chief. Just because your score, because that's the thing too. Score doesn't always impact decision. That's one thing I'm going to tell people right now listening. As a processing loans, doing all those things, I have approved 670s and I have declined 780s.
Oh, wow.
Where I know when that came out of my mouth, people are like, that doesn't make any sense. But you haven't had credit in 20 years. You haven't used anything. There's not enough history. Unfortunately, that doesn't meet the criteria to make you eligible for lending.
Yeah.
Reality, guys, coming from the banking industry is if the banks wanted to lend money to people that didn't need it, they wouldn't be making money, right? So there's also a thing to be said there where I've shared the story where I had 2% debt utilization overall over $200,000 in available credit, and I couldn't get a line of credit. And the decline reason was utilization too high. And I'm sitting here going, what do you mean utilization too high? And I fought this, right? Because I worked at the bank at that time, and I took it up to the department where they were underwriting. And I'm like, I want you to explain to me how I have 2% utilization on my entire credit platform, have over $250,000 up to almost $250,000 in available credit, and you're telling me I can't have a credit line with the bank that I've worked at for almost 10 years because I have a high debt to income ratio. And I go, I'm going to sit here while you explain it now. And he goes, all right, so the reality is you have so much available credit that we don't want to give you more credit because if one day you decide to start racking up all your credit cards and filing bankruptcy, we don't want to be a part of that. It's like, I got it. So I'm being punished for being responsible. Meanwhile, Joe Schmo can come in drowning in credit card debt, drowning in loan debt, drowning in this, but you'll give him that loan because you know he can't pay it off. And you make money off of giving us the loan? No, not origination, because most banks don't even do origination fees. In commercial lending, we do origination fees, but in standard lending, no. Where do you make your money? Interest. And if you can get somebody to stay paying
That nice 25%.
that nice 20%, 20%, 30%, and you can keep them long, that's where all the money gets made. So
That's crazy. You know,
Yeah.
I'm again.
It gets frustrating. I get it.
Jumping into the why wasn't this taught at school? Like this is a reality thing about why aren't we teaching that to our kids, right?
Yeah.
Because that is so important. Regardless if you go to school and you get a master's degree, you go to become a doctor. Like that's debt in there. Why aren't we understanding about that and the interest? Now, and other people will say, "Oh, I can't do this because of this." I'm like, "Well, yes. That's why you can't buy your dream home because you decided I'd rather spend interest on this part." You said something on your social media that hit me hard, and I'm glad you did. It's like, if you can afford an apartment, you can afford a house. Yeah. If you can approve for an apartment, you can afford, you can get approved for a house.
And that goes back. I did that. I was like, wait, I can get an apartment, but you know, with all my research that I was doing at Google at the time, I was like, I can get a house. Like, why would I get an apartment?
It's the same documentation.
Yeah.
They still ask for your pay stub,
Exactly.
bank statements.
Yep.
They still ask for your
Like
W-2s,
credit,
and your
everything,
credit.
everything. So I was like,
And deposit.
get a house. So
Yeah.
I went from like looking at a 2-bedroom apartment, you know, like 600 square feet, to buying an 1,800 square foot 4-bedroom home.
That's right.
Like,
that's right. I found one out. That's right.
You know, you guys could do it. You know, you guys can do it.
That's crazy.
Yeah, everybody thinks it takes a magic wand or something, but it just takes some pre-planning. Because that's the thing. The reason most people can't afford a house is not because they can't afford the house. It's because they have nothing in savings. They have no credit and nothing in savings. Because unfortunately, unless you're VA, you have to have that down payment. And it sounds like you were smart enough to go, well, I'm going to have first month, last month. Maybe if I just stack it a little bit higher and work on my credit, then instead of first month, last month, I'll just get a down payment. And when you think about it, I'm sure your rent at the time you were going to get that 600 square foot apartment was probably, if not slightly less, maybe comparable to what you pay now as a mortgage.
Yeah,
so it's
it was a little less. But
but still, right?
But
a little bit more, you own it.
Yeah, you own it.
It's different, bro.
It is. It is. I mean, you know, I think this is a good time to ask the question too. Like, what's the difference between a credit repair company and just somebody who disputes items?
So I always tell my clients or my leads this, you know, prospective clients. They're like, you guys can go to the grocery store and grab all the ingredients that you guys want, and you guys can go cook this at home. You guys can do this. Or you guys can go into a restaurant and have somebody else who already knows how to do, you know, that food and have them do it for you. So that's like the easiest way for me to explain it, maybe because I love food.
No,
Us too.
No.
You're meeting me now. You're not meeting me.
Yeah, we're seeing eye to eye.
Yeah.
No, but it's also, that's the same thing, right? I can give you all the ingredients, but will it taste the same?
Right, and it won't. That's why when people are like, oh, I asked my mom for the recipe, but it never tastes the same. It just doesn't have that love in it.
You don't just do it the same.
You miss that extra little in it. And that's so crazy. And that is so true. It's just like anything that in professionals, like whoever you surround yourself with or whoever you hire, you should take it that serious. And don't worry how much you spent in the long run. Like, hey, now you have someone that's going to really take care of it. You know, if we're trying to save a buck or two, I get it. If you're in that position, I get it. However, that's the person you're hiring to take care of your life too. It's part of that credit. You know, you said you could not get into an apartment or finish school because of your credit.
Yeah.
That's crazy.
Yeah.
You're technically homeless in that particular case because of your credit.
Yeah, I had to come back. Thank God I had my parents. You know, not everybody's as blessed as I was in that situation, but that, you know, at the time I was like devastated, but now I look back, I'm like, wow, that was really a blessing, you know?
There's no losses. There's learning.
Yeah.
There's lessons. You know what I mean? So that's dope.
And I think it's important to keep in mind too, this day and age, two things can really affect your opportunity for employment. Because you might not want to be a business owner. You might just want to work somewhere, your dream job. There's two things that'll keep you from it. One is what you do online. If you're out there posting like Kanye and somebody reports you, probably going to lose your job. That's one. Being mindful about, and I think this comes back to like emotional maturity and stability, where it's like you're not allowing things to get you so wild out that you just go crazy just because somebody says or does something. That's one. Number two is your credit, because most companies now are credit checking their employees. And I remember towards like the end of my banking career, I worked with somebody who had very bad credit, and then the system flagged her, and they're like, hey, you can't be a banker with a 600 FICO. So either you get your score up or you're going to have to, you know, exit the company because that doesn't meet the standards. And maybe as a cashier at a grocery store, that's not going to affect you. But if you're trying to accomplish your dreams and goals, I imagine your dreams and goals goes further than a cashier at a grocery store. And if that's where your dreams and goals are, then hey man, best of luck to you. Yeah. But most of us listening, most of us productively working and trying to achieve more for ourselves and our family are like, I want to hit the pinnacle, right? I want to get to the highest level possible. But we have to practice what we preach.
Oh yeah.
So, you know, I'm sure she's probably got the best credit score in this room.
Yeah. Well, I mean, she knows how to negotiate.
You know what? Let's back it up right there. I'm going to say, do not co-sign for people.
Oh.
Do not co-sign, you guys.
Oh, is that okay?
Do not. It's great. besides one little thing, and it was, you know, a cosign. So now I preach to everybody, like, don't cosign. Yeah. You know, they have to get their own.
Yeah, and don't cosign for your friend that you just met a year ago and you guys are besties. Like I've seen that too. Yeah, that's wild.
I had somebody I've had a lot of people reach out to me like, oh, I got this for my friend. You know, I co-signed their car. I co-signed this. I co-signed that. And they just let it go. And it's like, you guys are really sticking your neck out for
who?
Yeah, you got, you know.
Damn. You know, we have co-signers, right, for real estate. That's something that, you know, like, and we guide them through all that of what we let them know. But for a car, right, we can't afford a car or a credit card. Like, definitely not that. Like, do not co-sign for that, because you're like, it's that simple for them to say, I don't care. Yeah. And now, guess what happens? It affects you.
It's not just credit. It's not just co-signers on credit cards. You give somebody authorized user privilege, you're responsible for all the debt. They're responsible for none of the backlash. Yeah. So when you add as an authorized user, all the talking that they do prior to you saying yes, that you're just like, yeah. He's saying the terms of services is you are responsible. This is your credit card. This is under your social security number. Any debts that are accumulated and racked up because of your your authorized user is your responsibility. Because that authorized user can pick up the phone and say, I don't want this on my name anymore. Can you please remove me from it? I already charged 20 G's. I'm out. I get to keep the things. You get to keep the debt. So if you are going to have an authorized user on a card, and I see this with parents giving their kids authorized user access, you can ask the credit card company, hey, I want you to give me a second card, but I want you to make its limit 200 or 3, 4, 5, whatever their minimum limit. Every bank, every company is different. Some are 300, some are 500, some are 1,000. It's always different. But you say, hey, I need the minimum limit access so that if this person does go off the rails, their rail is only $300 to $500. So you're mitigating a lot of damage that could potentially be done there.
Also, I know some banks have, like, they don't issue a card. So I know because I've like helped family members, you know, I'll put them on authorized user because either they're establishing credit or they're starting from scratch again. And that really helps people, you know, becoming an authorized user on a card that's, you know, that's old with, you know, good history. So I do know there is that option that, you know,
that they don't receive a card.
Issuing a card. Mm-hmm.
Gotcha.
One thing to note too is not every industry will accept. They call it piggybacking. At the bank, we didn't accept it. So you could have 30 years of credit history, but none of it's actually yours, and the bank writes it off. They go, that's not your credit history. It used to be more prevalent after the 2008 crash, where people were losing all their credit, and then they were having somebody else get their credit back up. But then there was a time frame after 2008, like during that time, where the creditors and the banks started noticing, like, how did this guy go from declaring bankruptcy to an 800 again? Yeah. So I don't like the piggyback thing. It works, it doesn't work. You'll see history, but if somebody were to actually dive deep into it, like an underwriter, they're going to say, yes, you have a 700 FICO, but it's not your FICO. So it helps to get the score up, but don't rely solely on that, because a lot of lenders won't.
And that's what I tell everybody too. Like, if you guys are going to be authorized user, like, this is not long term. Yeah. This is like a temporary Band-Aid. This is just for you to establish your own history, you know? Like, this is not a forever thing. You guys got to get on your own 2 feet and establish your own credit.
Yeah. So when is the best time, if, you know, for a parent right now to add their children into that authorized user?
So for me, I always tell everybody, because some people are like, oh, I put my 10-year-old as an authorized user, but your kid doesn't really have to get credit until they're 18. So we don't know what's going to happen in the next 8 years, let's say, in that case. Like, what if you lose your job and unfortunately you start falling late and now your kid has bad credit, you know, like you have this card on your kid's you know, file where you're showing a negative account. So me personally, for my kids, I won't be adding them until they are 18. There's no benefit for me personally adding them before they're 18.
Gotcha. Okay.
See, and I do it actually the opposite. So my daughter, who's a month old, I already have her as an authorized user on cards. But that's because I'm not trying to get her credit. The credit is irrelevant for me. It's like if I go belly up on those cards, I'm just going to remove them as an authorized user. That way their credit doesn't get affected by it. Because It'll use against their utilization too. It's really funny. Even though it's my debt, it'll show in their credit report as high utilization or low utilization. But again, if an underwriter goes in there, they're going to write that off. But the reason I do it is for banking history. And if you want to tell some of your clients, if you're looking for a relationship thing, so like when your kids do turn 18 and you want them to get approved through your bank for like a college credit card, that actually helps.
Okay. See, I
So,
didn't know that.
so maybe if you do it at like 15 or 12 and then you let them have 6 years of relationship, because technically, even though they're not the owners of the card, their profile was established with the bank. So it starts. So my kids, when they turn 18, they're going to have 18 years of relationship. It's kind of like when you get added to somebody's AAA card.
Oh, yeah.
And they've been on for like 40 years. And then you get a card and it says, customer appreciation for 40 years. It's the same thing. It's like you weren't the customer for 40 years. But because you were on with somebody who is, you get the benefit of the 40 years.
Okay, so that's the blessing of being an authorized user with the bank, is having that relationship.
Yeah,
so
it builds a
whenever
relationship.
you do need them,
yeah.
it's available.
Yeah, because
Okay.
I used to get this all the time. Guy coming from, and I dealt with high money clients, but that doesn't matter. The point is the point. Guy comes and goes, I have $1 million line of credit at this bank. Okay, well, why'd you only give me 100? I'm going to say, so you were married for 20 years to the same woman. You date a new woman. You expect her to treat you the same after the 20 years of history, life, moments that you two went with? Or am I supposed to start fresh with you and we build our own life and moments? It's the same thing with the bank. So I would tell those clients, I'd say, listen, it's on file. We see that you can handle $1 million line of credit, but it's relationship. And you came here for a credit card, but all your millions of dollars are over. You came for a credit line, but I said, so you need to bring all that money here, because if you want me as the bank to invest in you, then you need to invest in me. Because this 1 foot in, 1 foot out didn't work. So we would have approvals on contingencies, meaning like, you can have this, but in return, before we approve you, you need to bring all those millions here. Because if you want us to commit millions of dollars to you, then you need to commit millions of dollars of assets to us. So there's that too, where it's like, the history part is great because, I've had 10 years with this bank. I'm 18. I have my first checking account, and I'm going to get a college credit card. The bank goes, okay, this person has a relationship with us. So rather than approving the kid that just came in because he saw the TV ad, who has no history, the kid with 18 years, right? They're 18 years old, but they have 18 years of banking relationship history. Is probably going to get approved over the other one.
Interesting. That's good to know.
You see, you're always learning.
Yeah.
You're always learning.
Always.
That's good. That's good.
This is a good question, because in this day and age, everybody wants quick, right? Everybody wants quick. I need that 2-day shipping, that 1-day shipping. I want it here today. I need it done now. How long does it take to repair credit? We were here with Nautic last time, and he told us if you're in a lawsuit and you've been hurt, 2 years is the minimum.
Yeah.
So now we're talking to a credit repair person, and tell us, Jasmine, what is the minimum? So if somebody comes to you, don't expect, hey, can I rags to riches in 6 months, obviously. So what is that time frame look like?
So that honestly really, really depends on everybody's situation and the route that they're trying to go. So if they're trying to go like just a dispute route and do nothing else, it's going to take like 9 to 12 months plus whatever time it takes for them to establish credit. Now, if they have, collections accounts and they want me to, call in for them and be like, hey, they want to settle, but in exchange, they want deletions, then that process can be a lot shorter.
Yeah, because paying it off doesn't always mean that it's off.
Yeah,
it just means.
So, let's say portfolio recovery. So, on their terms and policies, if you settle with them, even if it's for the lesser amount, they automatically delete it. Now, for charge-offs, that's not true. You pay it, and that's going to be on there for 7 years.
Yeah.
So it really, really, really depends. But again, everybody's situation is different, and for those who want to do the dispute route, it's definitely a 9 to 12 month, more or less, to even
minimum.
Yeah, it's not like I tell everybody, for your accounts to fall into collections status, it didn't happen overnight.
Yeah.
You know?
Oh, for sure. Right. Like I messed up, but I want you to fix it right away.
Yeah.
Like,
There's stages before that. You have derogatory, delinquent, then you have collection, or charged off, then collection.
It's like 30 days late, 60 days late, 90, and then a lot of them, they don't
even report until you're like a month late. They give you a window too. They do. Because they don't want to go through the hassle too. They're just like, hey, because people forget. I came out of the hospital, a week ago now? Like Sunday, I was there Friday to Sunday, before the week before that crazy bombing happened in Palm Springs. And it's like, I get a call from Citibank, and they're like, hey, you haven't paid your credit card. I was like, oh, that's right. Yeah. I was in the hospital. I forgot life was happening. I'm like, oh, okay, just take some money. You just take it out. They're like, okay, thanks. I was like, did a report? They said, no, you had like another 30 days until we were going to say anything.
Okay.
Yeah. So and I don't like telling people that because some of them get comfortable.
Oh, yeah.
And they'll be like, oh, I'll pay on day.
Yeah, mine was a
29.
legitimate excuse. Mine was a legitimate excuse, all right? Not because I went to the Padres game or something. I was in the hospital. There's a difference.
Yeah, so that's
life or death type of situation.
What tools and apps and websites? Because you mentioned Dr. Google helping you, right? Well, now I'm sure from when you first got started to now, there's a lot more tools.
Oh, yeah.
Between AI and this and that. I mean, what's out there that you like that doesn't replace what you do, but it helps your clients kind of stay on top?
Yeah, so one thing that we use a lot is credit monitoring. And a lot of people are like, we use Credit Karma, which, gives you like 2 of the credit reports from the credit bureaus, but their credit scoring that they show you is not the FICO score. So a lot of people are like, oh, like that's when it comes like, oh, I have this on my Credit Karma, but then, the car dealership runs it and it's like not the same. Yeah. So, I mean, it's a good tool just to see the full reports, not the score. So I'll give that like a 6 out of 10. Another one that I like is My Score IQ. That one, that's what we use for credit monitoring, which I think is really important because you get to see everything. It's like if you're going to a classroom and you got to see what assignments are missing, like you want to see what, everything, the accounts, the status, and that one includes your FICO 8s. So that's what I like. And also what I like is ChatGPT because you can always give it your scenario and it'll break it down for you.
Gotcha.
Yeah.
Yeah. Just be careful with AI, guys.
Oh, yeah. Definitely.
AI is one of those things where it's like I have clients who try to argue with me because they ChatGPT something. And then I'm like, hey, do me a favor. Stop reading the top line where it says you're right. Read the bottom where it just told you that after it said you're right, you're wrong. Yeah. And it's like you just have to be careful because remember what AI is. It's just everything that's online goes through a filter and then gets processed through ChatGPT. There's that old commercial where it's like, where'd you hear that? The internet. Oh, okay, so it must be true, right?
It goes back to the internet.
So it's like what's on the internet is what's coming through that filter. So always trust but verify.
Yeah, so what I like I just tried yesterday, I uploaded my my credit report to ChatGPT and I was like, hey, like break this down for me, like tell me what you see. And it did a good job. Okay. Did a good job. So I like that. As far as like finding information, and it all goes back to like, yeah, you got to verify it, you don't know where it came from. I can make a website and tell you that the perfect utilization is like 110%. Okay. So right. Yeah, definitely always go back.
And then you're like, where'd you source that from? And it's like memes.com.
Yeah.
And it's like, oh, okay, good to know. What's one habit from the listeners today that people could start to begin improving their credit? Like, what's that habit that everybody who's listening right now and who's going to listen as they tune in, because we have 5 or 6 people watching actively, but throughout the day, more people are going to click in when they have time and watch it on YouTube. What's something they can start today?
Today?
Even if it's just tracking.
I would set up auto pay.
Okay.
On everything.
Auto pay.
Because like you said, like sometimes things happen. I have auto pay on everything for my minimum payment. If I use a card and I make like the payment before the closing date, then, it just has me cancel the auto payment. That's just kind of like insurance for me. Yeah. Like
that makes sense.
Backup.
If you forget. Yeah. Yeah. The other one would maybe be if you don't have credit or, you need established credit, start with a secured card. Because even if your credit is bad right now, if you get a secured card now, you can start establishing your credit while you're fixing your credit. So that's one that I like to, like, getting a secured card to just start establishing.
Did I ever tell you the story, the security card thing?
There's a lot of stories.
I know we have a lot of stories, but there's the guy that came. It was back when I was working in La Quinta. I was a customer service sales rep. I wasn't even a full blown banker yet. And I remember the guy had a mortgage left of like a year. And the year, he was still paying a 30-year amortized payment on like 20 grand or whatever for a year, 5 years. I forgot how much was left. But I told him, I said, hey, you have the credit. Why don't we get you a loan for the same term that's left on the mortgage? And it was a higher rate, but it was a lower payment. And he just couldn't get his head around that. And I was like, because the loan that I'm giving you is amortized over 5 years. So the majority of your payment is principal, whereas the loan that you've been paying for the last 25 years has been amortized over 30, with the majority being towards interest, now going towards principal. I said, we would get you, it was going to half his mortgage payment. He'd never seen a strategy like that. And I was pretty proud of myself because I was a young buck at that time in the industry. And I was like, look, we'll get it through the loan. The bank's going to be happy because you're going to pay them more interest, but you're going to be owing that home free and clear for the next, instead of 5 years from now, today. And then and technically, yes, you're not supposed to advise credit. Credit's not supposed to pay credit, but screw that. I was giving him a strategic plan with it. I wasn't telling him just roll it.
Yeah.
I was like, you're better off owing the bank for a loan that's unsecured than owing a bank that's secured by whatever. Mm-hmm. And he didn't take the loan. I don't know why he didn't take a loan. I think it's just because he thought it sounded too good to be true. And I'm like, dude, it's right here. Here's what the payment would be if you would sign. You'd save money and you'd own your home free and clear today. Fast forward, he comes to me. He goes, I'm having this issue with Best Buy, and there's a Best Buy in La Quinta down the street, And I was like, okay, in the shopping center that was over. And I go, okay. And he goes, I'm not going to pay. And I go, dude, listen to me. I go, why are you not going to pay? Oh, I'm going to stick it to them because I'm in the right. They're wrong. They screwed this up. I'm not going to pay. I'm like, dude, stop being stupid for 5 minutes and listen. Your ego is going to get the best of you here, because the only way you're going to hurt this company is not because you're not paying them. They're going to ruin you, and they're going to ruin you for a long time because you're choosing to fight this fight. Pay them what you owe them and never shop there again. If you want to hurt a company, you pay them what you owe them, you never shop there again, and you tell everybody you can about your negative experience. That's what hurts their bottom dollar. But you saying, I'm not going to pay you, they go, okay, whatever, we'll write it off. And then he got a collections notice on it. His credit went from like 800 down to 600, and he came to me. He's like, hey, can I do that loan thing? I thought about it. This is like 6 months later, and I was like, sorry, dude. Your reports are now showing delinquencies, and you're not even eligible. So I can get you a secured card to help you get it back. And he almost flipped the table with how upset he got. And I said, I don't want to hear it, dude. I told you when we met 6 months ago, don't fight this stupid fight. And this is, ego is going to get the best of you. To those listening, you have to, Roy and I say, have humility, be humble, and just accept your losses even if you're right. Yeah. Sometimes being right doesn't mean you have to be right. Sometimes being right is knowing you're right and just doing what you need to do to get past it. And don't let your ego be the thing that screws you in this case, where it's like you could have had the world, but you chose to go down this fight with big corporate America, where it's like you don't even see who you're fighting. You're just fighting an icon, but who's behind the logo? You think it's the managers at the local, building? Yeah. No, it's not. You're fighting with who? The guy that gets paid $18 an hour to just ring you up, and it's like, dude, your fight's not with the right person.
Yeah.
Like, so be aware that those things make sense. So secured cards aren't bad. They're not bad. They can help you, but don't put yourself in a position where you need a secured card just because of a stupid.
But also, who else are you talking to this about, right? If you ask the right person, they were like, oh, that's something, go get it. The other one could have been, oh, nah, F that, bro. Nah, stick it to them. Yeah. All you need to hear that is once to agree with you, and you're like, okay, I'm going to do it. I'm not going to do it. I'm not going to pay them. And now 6 months later, look what can ruin.
Yeah.
That's crazy.
Yeah, it didn't
not
take
6
very
years,
long. It's 6 months. Yeah.
Dude.
And he was like, I'm ready to save. And I was like, oh, you're not ready. You're not ready to do anything now. Yeah. You ruined all that good credit history because $400, $500 over a TV. Like, pick your fights, man. Mm-hmm. Pick your fights. Those of you with kids, those of you in relationships, you know that. Sometimes.
With the house? You know what I mean?
Yeah, it's like pick your fights.
Like you just. I mean, I've learned a lot. You know, she's done work in my credit, and you know the story. I told the story already, and you know when you don't know, okay, it is what it is. We didn't get taught this, right? And even our parents didn't know this. But now, once you experience that, are we learning from that? And are we helping the people around us too? Like, don't do it, man. It's not the best way. It can ruin it.
Yeah.
You know, and that's crazy, man, because even with Jasmine, like, when you come to Jasmine, it's because you hit rock bottom, right? If you hit rock bottom, disclose everything to her.
Yeah.
Do not, first of all,
don't try to impress.
Yeah, do not be like, I think I know. You know.
Yeah.
You know. The sooner she knows,
yeah.
You know what I mean? It's like, come on, I'm trying to help you, but you're like, this is the only thing I know.
Oh, you know what? That's happened to me too, where we start on somebody's file. I'm like, okay, is this all you're expecting, you know? Is this it? I'm like, yeah, that's it. And then, like, we start the first month. And then the second month, like, all these new accounts. I'm like, you know, you guys, you know, I'm here to help you, not to, like, judge you, not to criticize you, you know, like, let's get all of this out and, you know, get started on everything. Yeah.
And this is, look you right in the eye when I say this. This is to you. Don't tell me you have a 700 FICO and then I run your score when we do a loan application. It's 420, 550, 600. Everybody, it's perfect. And then you go, why was that? Because, dude, it's not real. It's not real. No, it's real. Stop doing that. I hate that. That's one of my, dude, in lending, that is the biggest thing. We do an entire loan application. Oh, I have this, I'm an 800, I'm this, I'm that. You pull the score, you're like, you're an 800? You mean minus 800 or you're 800? Because your score came up 5. And they're like, 100? No, 5. I think the lowest score I've ever seen was like 210. And that was like everybody come quick. That was like everybody
take a picture and
come
post
here. We've never seen this before. It was like a unicorn. It's like, but it was a freckled unicorn. Like too many horns on its head, not the right color. And you're like, dude, you guys got to come see this. I don't know what factory this thing came out of, but this guy scores like 200. And you're like, I don't even know how you get that bad.
Wow.
But, well, you know, is paying off collections, we were talking about collections, do paying collections lower your score, you know? Because a lot of people have that, like you were saying, oh, I paid it off. Why? So what are your recommendations for people who want to pay off their collections? And does it help them lower their score?
So, it goes back to, it really depends. It depends what's on the account right now. Is it a closed collection, open collection? And sometimes collections accounts mess up and they don't report it as negative. So it'll be just reporting and they won't report every single month. You know, so that's why I say, like, this is really something that should be taught in school, how to read credit reports, what it means, because a lot of times, yes, paying your collections, you know, if they're willing to delete them, then that makes your file look better. You know, the less negative items that are showing in your file, well, then the better it is, you know. If you have like 5 collections accounts and they're all willing to delete them, you go from 5 to 0. You know, that's going to be a nicer looking file than, you know, settled accounts or open outstanding balances accounts. So it really depends.
Yeah. And I think it's important to note, guys, like housekeeping tools, I think the bureaus allow you 2 credit reports a year for free. If I remember correctly. It's 1 or 2, but I believe it's 2. You can do 1 every 6 months. Do that. It's free. You go to their website and you can pull a free report because they're by law mandated to give you at least 1 or 2, and I believe it's 2 free reports a year. And then you can go to myannualfreecreditreport.com. I used to use that at the bank all the time, where it's like you get a full report, you get 1 for free, use it. Housekeeping, just check, make sure, because sometimes you might have fraud on there that you're not even aware of. And it's like, yeah, you're not liable for the fraud, but the process to get it removed when something's 6 weeks old versus 10 months old is a lot harder. You know, it's easier to prove this wasn't me if it's only been going on for a week. But then the bureaus start going, how did you not know about this? It's been 3 months. It's been 6 months. How'd you not know? I just don't check. And it's like ignorance isn't an excuse. So before you let it get to that point, you know, and checking your inquiries too, because like you go to a dealership and you buy a car, they do what's called shotgunning. Shotgunning is where they tell you you're going to run your report once, right? You signed one credit application. They're going to run your report once, but they're going to run it multiple instances within that same instance. That's why they call it shotgunning. What they do is they spread it. It's like a big shotgun blast that you take it and they boom, it goes out. And they're just hoping, who's it going to hit? Which creditors are going to hit? So you might get one car, go to one dealership, and then if you actually pull your report, you'll see 7 inquiries. Because every bank has to do their own individual inquiry on your personal credit file. And most people don't know this. It's as simple as picking up the phone and being like, hey, these 6 from the banks that didn't take my loan need to be removed. Because the only one that took my loan was Chase Bank, and I signed an application for one, and they go, okay, no problem. Thanks for letting us know. It's that simple sometimes.
Yeah, and I have a guide on my website for that, and it's free. You guys can go on the website, and it tells you, like, talk to this person, this is what you tell them, and yeah, all you have to do is call and get those removed.
But you have to know that they're even there, and how do you know that they're there? Check your credit.
Yeah, and I think, you know what, ever since COVID, they started allowing once per week for the annual credit.
Oh, really?
Yeah. I got to go check. I haven't checked this month.
Yeah, because things changed. Everything was kind of crazy during that time.
Yeah, I know, like, 2-3 months ago, it still was once a week, which is kind of crazy because it went from once a year to once a week. I got to check. Yeah. But it was more than once a year, though.
Well, what she'll do, we'll have Jasmine comment down below when the video finishes up, and she'll be like, this is my website, link in the description.
Yeah.
And because we definitely want people to access her resources. But I think that, we're coming up on the hour mark. Do you have any topics you want to take us home with, or things you want to discuss before we wrap up? But I feel like we've given a lot of information.
I think so. I kind of like had a few things I wanted to talk
about,
but we actually covered them already.
Oh, cool.
Okay.
Yeah.
Well, that's good.
So how can people find you? Let's get there. What's the best way for somebody to contact you? Because maybe somebody listening might say, man, I need to do credit. Because I don't do it. I don't do credit repair. We don't do that here at MITM. Yeah. We don't do that at Parents and Pennies. We're a business advisory firm. We don't really even deal on the consumer side anymore. Again, my background can talk to people about what to do, but if they go, okay, do it, I'm going to say, not me. Yeah. And I recommend people to come to you, but the people that aren't my clients that are listening right now, how can they get a hold of you?
So you guys can contact us online. It's jayohcreditrepair.com, and we have a chat feature there. Super easy to get a hold of us. We're on social media too. Everything's Jayoh Credit Repair.
And how do you spell that, just so in case somebody...
it's Jayoh.
Okay. So J and then O.
Jayoh.
Yeah. J-O!
There we go. Well, we appreciate you coming on. Thank you. This was a big topic because I know credit is one of those things where people are just like, there's a lot of misinformation about it, and a lot of my cousin this, my cousin that, my uncle this, and when we did that thing, one of your guys' students was like, my uncle says, I said, what's your uncle do for? He's a mechanic. Cool.
Yeah.
So let's keep it that way.
Yeah. Mechanic stuff?
Go to him. Stuff, yeah. Credit stuff, stay away.
Yeah, that's not the person.
So, I want to thank everybody for tuning in. This was episode 13, and before we take it off again, Jasmine, thank you so much for joining us. And in case she doesn't know what that is, tell her what that is, because she probably doesn't know.
Shout out to the 4 most important things in my life: God, my family, my clients, my football players.
That's it, baby. And we should be back to normal scheduling. We should be back to normal scheduling soon. I'm on paternity leave right now. We were blessed with another child. Taking some time to really enjoy, as I'm done after this. I ain't doing no more. So I'm going to enjoy this one. I'll probably be back in June, assuming everything's good. So probably another week or 2, and then we'll be back on our weekly schedules. And then, I want to thank everybody for listening, and we hope to see you on the next one.
Stay blessed, everyone.
Thank you for joining us on this episode of Parents and Pennies. We hope you found our tips and insights helpful. Remember, it's not about how much you have, it's about making the most of what you've got. If you enjoyed today's episode, don't forget to subscribe, leave a review, and share it with other parents who could use a little financial guidance. Join us next week for more real stories, advice, and the financial wisdom you need to keep your family thriving. Until then, keep making those pennies count.